I'm here with Will Hutton. He is the Executive Vice Chairman of the Work Foundation, which is Britain's leading independent voice on work and employment issues. Mr. Hutton is a journalist, an economist, and an accomplished book author, and of course, a graduate of the MBA program at INSEAD. Let's look at the big picture first. What is your outlook for the British economy in the medium to long term?
The pace of adjustment, the pace of lowering the structural deficit is the fastest in the OECD, bar Iceland and Ireland. You're having to do it for particular because both countries nearly bust. And this is a most extraordinary act, I think. It's driven entirely by politics and not by economics, and I think it may end in tears. I think the underlying structures are disappointing. There's too little capacity to export, to exploit the undervaluation of the exchange rate, and too much capacity and too much absent productive capacity. So there's a very high propensity to import. So even though the pound has been devalued by, on a trade-weighted basis, 20%, and imports are still coming in as if that devaluation hadn't taken place. Why? Because there's no domestic capacity whatsoever to substitute for imports. But, and here's the big but, I do think there is an emerging consensus that the country has to build an innovation and investment ecosystem to rebalance the economy away from financial services, construction, property, excessive reliance on retailing and distribution, to actually value-added activity across the knowledge domain. And there are also a number of very strong companies already in this territory in the UK. And I think with the right policy mix, and if the exchange rate remains as competitive as it is, I think gradually the UK economy will start to look stronger and stronger. And of course, the public finances will look more balanced. So short to medium term, I'm a very depressing outlook, I think. More beyond that, signs of potential green shoots.
Let's get back to the government's austerity plan, which you mentioned. There are a lot of people out there who believe that it's going too far, too fast in the current economic environment, that it is too risky. You're one of the people who think that it is ill-advised. Can you elaborate a little bit further on that?
I think that the conventional economics has profoundly underestimated the impact of this fiscal consolidation in Britain. And I think people have hugely underestimated the social consequences of it. In large parts of the country, of the UK, employment is dependent on the public sector and frankly social health and social vitality. And the idea that actually sanitary voluntary groups are going to fill the gap occupied by the health service or publicly funded charities is, close to hallucinatory. And so I think that the UK has embarked upon a completely unsustainable fiscal adjustment, and it's done so for two reasons. George Osborne, the Chancellor in particular, but also David Cameron, do not believe in publicness and the public realm, the public institutions. They want to attack the big state they believe they inherited from Gordon Brown. And secondly, there's the electoral cycle. They know they've only got a year or two to do this before the coalition may come apart in their hands. So it's been driven politically by ideology and political judgment about elections, and not actually by judgment of what the economy needs.
Okay, so far about the government. Let's talk about one of the other institutions here, the Bank of England. It appears to be split three ways at the moment. It has to obviously try and tackle the inflation problem. There are a number of members who believe that we should hold rates steady. There are two members who believe that we should raise rates to fight inflation. And there's one member who actually thinks that not only should we hold rates, but we should pump more stimulus into the economy. Which one is right?
There may be a case for a small increase in rates. But I'm basically with the governor that actually there's a lot of spare capacity, that there's no domestically generated inflation pressure, and actually to make money more expensive because Asia has come to the economic table in a country like the UK is a rather self-defeating thing to do. So I'm hoping that the members of the MPC, I'd impose on the external member who's for stimulus, and actually the Bank of England team, the home team, actually stick to their guns.
Any recovery should, of course, go hand in hand with creating more jobs, creating employment. Yet the government's austerity plan is aiming to cut more than 500,000 jobs in the public sector. Do you think that the private sector will be able to balance that out and pick up the slack?
It's true that in the 90s, the private sector in Britain generated over 1 million jobs, of which 800,000 were in business services. But that's not going to happen in the 2010s. And part of the reason is that the public sector itself provides a lot of jobs for business services as it contracts out. But the capacity to do that on the same scale, all the low-lying fruit's been done, and what remains is highly problematic and low margin, which the public sector doesn't want to do very much. Manufacturing only generated a couple of 100,000 jobs in that period in the 90s in the last recovery, and we know from the States. I mean, back in the 60s and 70s, 3 quarters after a recession, U.S. employment was back to pre-recession levels. Now it takes 5 years. The private sector is much less capable of generating jobs than it used to be, and part of that, and I agree with this chap Tyler Cohen, who's written this rather interesting provocation, The Great Stagnation, is that actually we haven't got a kind of a wave of new innovations that we can industrialize in the private sector to provide kind of industrial levels of employment and industrial levels of wealth generation, which we had in the 40s, 50s and 60s, television, brown goods, white goods. And in this environment, the public sector has to play a role as employer of last resort. Has to. It's a bit like the 1930s with the New Deal program and the Works Progress Administration. But actually, that's not what people's heads are at. People still are locked in this paradigm that was built up from the 70s to the end of the last decade, and the economics around it, which we know is inappropriate at best and downright wrong at worst.
The Work Foundation focuses on work and employment issues. What do you think are the 3 key measures that have to be undertaken to create employment opportunities? One,
really build institutions that support investment and innovation, everything from science parks through business banks. 2, reframe the workplace bargain. We need to move away from taxing employment, both in terms of high redundancy payments and national employment, and move to a system of livelihood insurance. We need to develop the kind of Nordic notion of flex security, where we acknowledge that people are going to do many jobs during the course of their life, have to transition from one to another. They can't get huge payoffs every time they get made unemployed, or the business model, the company they work fails, which can happen more frequently in the rapidly changing world of the 21st century. We have to instead offer them livelihood insurance, where they can retain a good measure of their previous earnings, but also can retrain and reposition themselves in the labour market. So that's the second thing. The third thing, I think, is we have to acknowledge that the public sector is an employer of last resort, and that actually either providing apprenticeships or job guarantees, in large parts of a country like Britain, it'll be the only place where there's employment opportunity. Those are 3 things you have to do.